The federal budget for 2023 and 2024 has just been announced. So who are the winners and who are the losers? Delivered by Treasurer Jim Chalmers on May 9th, 2023, the budget focuses on several critical areas, including health, housing, and cost of living. In this video, we'll dive into the specifics of what this budget means for you, particularly if you're a property investor or a small business owner. Remember, understanding these fiscal policies can empower you to make informed decisions and provide a clear picture for what to expect in the coming financial year. So let's dive in. First up, let's talk about small business taxation and depreciation. The government has made some changes to existing incentives and introduced some new ones to help small businesses manage their tax obligations this year. For example, the temporary full expensing scheme, which allowed an immediate deduction of full cost of eligible depreciable assets, which will not be extended beyond its current deadline of June 30, 2023. If you've been relying on this for a cash flow boost, make sure that you purchase and install any eligible assets before this date. On a positive note, small businesses with an aggregated annual turnover of less than $10 million can look forward to the return of the instant asset write-off threshold to pre-pandemic thresholds of $20,000 from July 1, 2023 to June 30, 2024. The government also introduced a small business energy incentive. These incentives allow businesses with an annual turnover of less than $50 million to receive an extra 20% deduction from their expenditures related to energy efficient improvements and electrifications. This is a great way for your business to go green and benefit from a boosted tax deduction. Now let's switch gears and talk about the changes to superannuation. The government has introduced a higher tax rate for higher super balances. From July 1, 2025, if you have more than $3 million in your super fund, you'll have to pay more tax. The tax rate will be at 30% of any earnings, which is 15% more than the current tax rate of 15%. So it's essential for the higher balance super holders to start planning ahead. Consult with a financial advisor to navigate these changes and ensure optimal tax management. Meanwhile, for those looking to join the property market, there's good news. The government has extended the first home guarantee to include joint applications for family and friends. Similarly, the family home guarantee, which initially targeted single parents, has been extended to include single legal guardians starting July 2023. Another major highlight is the Household Energy Upgrade Fund. This fund will allocate $1 billion to the Clean Energy Finance Corporation to facilitate over 110,000 low-interest loans for energy-efficient home improvements. If you're planning on making eco-friendly upgrades to your investment property, this could result in maximise depreciation deductions. To wrap it up, the last notable change is the new build-to-rent deduction incentive. Developers can now claim capital works at a rate of 4% instead of the usual 2.5% for build-to-rent projects. The purpose of this incentive is to try and increase the supply of rental housing and reduce the rental market costs. For those unfamiliar with this concept, build-to-rent projects refers to properties developed with the developer's intention to retain ownership and lease out the units. Until now, only properties designed for short stay could claim capital works at the 4% rate. This new incentive opens the doors for long stay rental properties to be claimed at the accelerated rate, something not seen since 1987. But keep in mind that this incentive only applies to properties with a minimum of 50 units, which must be retained under single ownership for at least 10 years before being sold. And these properties must be advertised for rent within 3 years of completion. With that covered, let's recap the key takeaways from the Australian Federal Budget 2023-24. There's no extension to the temporary full expensing scheme beyond June 30, 2023, but there is an increase in the instant asset write-off threshold to $20,000. The small business energy incentives allows small businesses to claim 20% tax deduction for energy efficiency improvements and electrification expenses. Changes to the superannuation system, including a higher tax rate of 30% on balances exceeding $3 million as of July 1, 2025. Property buyers' incentives have been extended, such as the first home guarantee, which now includes joint applications for family and friends, and the expansion of family home guarantee to single legal guardians. The Household Energy Upgrade Fund will provide $1 billion to Clean Energy Financial Corporation to facilitate over 110,000 low-interest loans for energy-efficient home improvements. And the new build-to-rent depreciation incentives allows developers to claim capital works at a rate of 4% for build-to-rent projects under specific conditions. Remember, These changes offer substantial opportunities to boost your depreciation deductions, especially if you're a small business owner or a property owner. So now more than ever, you need to have an up-to-date tax depreciation schedule to ensure you're maximising your deductions. As always, if you found this video helpful, don't forget to like, comment and subscribe to our channel for more updates on property investment and small business taxation. Thanks for watching. We'll see you in the next video.